Mark Twain once said, "Buy a land, they are not making it anymore." Real estate is one of the oldest industries in the world. It's not a coincidence that we have been told that a house is the best investment you can ever make. Of course, in the 21st century, we have far more investing tools than generations before us. Derivatives, options, bonds are no longer the instruments that only the rich have access to. With a simple investing app on your $200 smartphone, you can start trading stocks. And besides, best performing investments are not even coming from the rich, but from the bottom, such as cryptocurrencies that are challenging the status quo. Regardless of all of these investments, real estate still remains the king of investments, because unlike anything else, it's simple, you can touch it, and it's easy to understand. You don't have to look far for some evidence. Once world's richest man Bill Gates is also pouring millions into real estate. Bill Gates now is America's biggest owner of farmland. He purchased almost 250,000 acres of farmland across the United States, enough to make him the top private farmland owner in America. But regardless of how great this market is, it still goes through ups and downs. And if you end up buying a house when the market is at its peak, you're going to lose, because sooner or later the value of your house will crash. And there is a huge difference between buying a house and investing in real estate. They might look as if they are the same thing, but your needs usually do not align with what's better from investing point of view. So as a real estate investor, I want to share with you why millennials should not buy a house now. Or at least if you're buying a house, you have to consider all of these factors that I'm about to share with you. So give this video a thumbs up and let's jump right into it. Bidding is a bad sign. A house with an asking price of $3.5 million was sold for $4.5 million because the seller received 7 offers, and the price bid kept rising to the point where the house was sold for an extra $1 million. If you're the seller, that's a good sign. If you're a buyer, then you might be wondering whether it's worth paying an extra $1 million or not. And this is not a single case, it's happening all across the market, even when it comes to houses that cost just a few $100,000. People are overpaying by 30, 40, or even 50% just to be the one who is going to buy that house. And that's normal in the market when there is a shortage of houses. This graph shows it all. It illustrates the number of monthly supply of houses in the United States. Starting from 2010, when we got out of the last housing crash, the supply of houses was at a stable rate. So house prices grew steadily, but there is a clear sign of how the number of houses in the market dropped significantly in April 2020. And even though we're almost out of this pandemic and the future seems a little bit more predictable than it was a year ago, the number of houses didn't increase much in the market. And that's probably because the sellers are looking at how fast the home prices are rising and are like, why should I sell when I can wait and keep getting wealthier doing nothing unless I will get an offer that's really good? I'm not selling. That's why in a single year, home prices rose by 17%. In a single year, home prices rose as much as they did in the last 5 to 10 years. That is a good reason not to sell. It is psychologically difficult to convince yourself to sell when everything is rising. It is really difficult. It really doesn't matter if it's a stock, Bitcoin, or crypto, whatever it is. When it's rising for some reason, you imagine it is going to rise forever. And if it's falling, you imagine it is going to fall forever. That's why people often quickly sell to minimize losses. Most people are short-term thinkers and not long-term thinkers. In these kind of times, I like to remember what Warren Buffett said once: be fearful when others are greedy, and greedy when others are fearful. Now is the time when everyone is greedy. I'm not saying there is going to be a crash or how much more prices are going to rise. All I'm saying is that just take a look at what's happening in the market. Do you think you can find a good deal? A good deal is when the price of the house is lower than the market's average so that you can renovate it and it will rise significantly in value, or you can rent it out for a much higher price. Or at least a deal that's not above the market's average. But that's never going to happen when you are in a bidding war against dozens of other buyers. Don't get me wrong, owning a house is far better than paying rent your entire life, especially if you're going to live in that area for a long time, even though home ownership comes at a higher price maybe. It includes renovation and other expenses. However, you also have to consider the opportunity cost. This is the cost that people don't count in when they are thinking of buying a house. Every penny you use to buy a house is a penny that you could have invested elsewhere, like the stock market, Bitcoin, or anything else, including your own business. But let's take something more stable like the S&P 500, an index fund that invests in the top 500 US companies. It usually grows by around 10% in the long run, but let's be a bit more conservative and take 8%, just to be safe. When you take a mortgage, it's a 30-year investment. You're going to become a homeowner, but you have to keep making your monthly payments for 30 years. So let's take a look at what would happen if you have invested that money elsewhere and rented a place. Let's take a $300,000 house. With a 20% down payment and a 3% mortgage rate, you're going to pay $1,017 per month. That is significantly cheaper than renting, since that house would be rented out for at least $2,000 probably. But if you count property taxes, renovation, which is another 1% of the total price of your house, insurance, which is let's say another $100, you will end up with $1,700. Not bad. Buying a house still looks like a far better deal. But now let's count the opportunity cost. That $60,000 you paid upfront as a down payment, let's say you're going to invest it in the S&P 500. And as I said earlier, we're going to be conservative and take just 8%. With the compound interest, it will grow to over $600,000 or $1,677 a month, which makes the real cost of owning a house $3,377. Of course, the price of your house is also going to rise, but if we have learned anything from the 2008 crisis, home prices can also crash. Especially since home prices have risen by 17% last year. Only time will tell how this astronomical rise is going to end. But in order to invest in the stock market, you have to understand how the stock market works, and that means you have to spend months to master it. But I have some good news for you. I've spent years investing in the stock market, and to save you some time, I have summarized all my experience in the stock market into a short, straightforward, fully animated course. And the best part of it is that it is available on Skillshare and you can get it for free if you use the link in the description. At the end of the course, there is going to be an assignment that I will personally check and provide you with the feedback. Anyways, buying a house isn't always a bad decision. In fact, it can be a great decision, especially when you're settling down and building a family. But right now, when we're getting out of this pandemic, we're not sure if we're going to continue working remotely or we're going to get back to how everything was to pre-pandemic. When there is a bidding war in the market, finding a good deal has never been more difficult, especially all the headache you have to go through when buying a house. You might buy a house now and then realize a year later that it was a mistake and life is getting back to normal. So that house that seemed attractive during the pandemic is no longer that attractive. And who knows when the market is going to be at that time. Chances that you will lose money on that house is way higher than you make money. And now it's your turn to let me know in the comments below, what do you think about buying a house now? Is it a good time or is it better to wait until things calm down? If you have enjoyed this video, you will enjoy this custom playlist that I have created specifically for you that has our most popular videos on business, investing in the stock market that could potentially change your life. And now, give this video a thumbs up that it deserves and make sure to subscribe if you haven't done that yet. Thanks for watching, and I will see you in the next one.